First, let's take care of a couple of housekeeping measures. First of all, please silence your electronic devices so we don't get any interruptions during the presentation. Our speaker will address us for about 20 minutes, and then he'll take questions, and we'll need to end right at 1 o'clock so everybody can get back to work. Questions are invited from the members of the working press and the members of the press club only. So everyone else enjoy our speaker. And our speaker today happens to be a familiar face. He's been here several times before, and he's a very popular face right about now because we're in the middle of a lot of issues that are impacted by the Department of Insurance. Our speaker, Commissioner Jim Donelon, is from New Orleans. He went to Loyola Law School. He was a state legislator, and he's been in this capacity with the Department of Insurance for quite a while. And he's got a lot to say today, so without further ado, Commissioner Jim Donelon.
Thank you. Thank you very much. I appreciate the opportunity to be here. In fact, when my staff started putting together my talking points for today, they made the note that I was scheduled to be here on Monday, August the 30th, and but a weather disaster named Hurricane Ida changed our plans. And looking over those notes for that day's appearance, they said, quote, in parentheses, talk about Tropical Storm Ida, close quote, as a note. So anyhow, we're here to talk about Ida, but also before I do, let me go back a year to Lake Charles and Hurricane Laura, followed by Delta, and then in the New Orleans area, Zeta, 1, 2, and 3. Hurricane Laura, until this event, had become our second largest insured loss event in the history of the state. We, with the cooperation of the National Association of Insurance Commissioners, are doing what's called a data call on a quarterly basis to all the companies doing business in the state, getting them to report on their payments, their claims, their payments, their files closed, the files still open and remaining to be worked on. The last quarterly report, which will be the second to last total report, through June 30th of this year, found that companies had paid $10.1 billion in insured losses for the three storms last hurricane season. Actually, we had 5 named storms make landfall in our state last year, first time ever, and 3 of those ended up becoming a hurricane. And Laura collected for policyholders $8.6 billion of insured loss. And a couple of weeks later, Delta came through the same Cameron Parish, Calcasieu Parish, and up through the center of our state, and cost insurers another $800 million in insured losses. A couple weeks after that, Zeta came through the New Orleans area, and in Louisiana added another $600 million to that total. Before Katrina, that $600 million for Zeta would have been our largest insured loss event in our state's history. We had 2 $500 million events. One was the Louisiana piece of Hurricane Andrew back in 1992, and the other was a hailstorm that came through the New Orleans area on a Sunday evening in the year 2000, both of which were right over $500 million in insured losses. Of course, Katrina in 2005 ended up being the all-time largest insured loss event in the history of insurance anywhere in the world, and still today holds that record on no adjustment for inflation, pure dollars, $23.3 billion paid to Louisiana policyholders for wind damage from Hurricane Katrina. And we collected from the National Flood Insurance Program an additional $16 billion for flood losses for Katrina and Rita combined. They didn't break out the two separately. So that was our record. It broke our previous record by 50 times plus. Doesn't include the devastating effect that Katrina had in Mississippi back in 2005. But Laura exceeded. 3 weeks after Katrina, we collected another $3.3 billion in insured losses for Hurricane Rita when it went through the southwest corner of our state. So the $8.6 billion for Laura is now our second largest insured loss event of all time. Let me, before I get into the events of Ida and the rest, let me also touch on the National Flood Insurance Program, which has been extended as was done a couple of years ago with short-term extensions after reaching its expiration, its long-term extension expiration date, about a year and a half ago now, and is poised to be extended again. But this time with a proposal that actually began in the previous administration, in the Trump administration. And I put some flyers on the tables talking about what's called risk rating 2.0. And it's a whole new way of rating for flood insurance exposure in the U.S. It will no longer be dependent on elevation and levies and certified levies, et cetera, et cetera. It's a new concept. And the flyer you have will tell you that it will be of minimum impact on most policyholders with a 10 to 20% or less increase in the cost of flood insurance, but and some will see no change in their premium costs, but for 3% of the policyholders, and in our state that's 15,000 policyholders, they will see greater than a 20% rate increase as a result of risk rating 2.0 being implemented, if it is implemented as proposed. I have not seen the details. Those are points that have been made public by FEMA, which is actually the owner of the National Flood Insurance Program. It's called insurance. It truly is not insurance. It is a FEMA program to insure property for flood exposure. It actually was created as a result of Hurricane Betsy hitting New Orleans back in the 60s. And after that flooding event, which inundated the lower Ninth Ward and Chalmette and St. Bernard Parish, just as Katrina did when the levees failed here in 2005. After that flooding event from Hurricane Betsy, the federal government, the insurance companies across the board began excluding flood damage and did it quickly in a matter of years. And the federal government responded to that need by creating the National Flood Insurance Program for a 5-year permanent period. And at the end of those 5 years, extended it for another 5 years and another 5 years. And for the first couple of decades, it wasn't controversial to extend for another 5 years each time the program ran out of authorization. But 5 years ago, or actually more like 7 or 8 years ago, it became very controversial when the fiscal hawks of the Congress resisted authorizing it for another 5 years, except if the advocates would agree to put it on a 5-year glide path to actuarial rates, to rates sufficient to pay for the program. So they, in a compromise, rolled that out. And similar to Speaker Pelosi's comments after passing the Affordable Care Act, when she said we had to pass it so we could read it to see what it said, they did the same thing with the 5-year extension 7 or 8 years ago of the National Flood Insurance Program. And when they rolled it out and read it, tens of thousands of properties in the state of Louisiana would have been rendered worthless overnight if there had not been a rollback in those draconian rate increases on those tens of thousands of properties. And they would have been worthless because those properties, in order to be marketable, have to have the ability to affordable flood insurance available in order to qualify for a federally backed mortgage. So that if you can't get financing on those properties, you can't get someone to buy them, obviously. You might get someone, but only rarely would you find someone willing to buy properties under those conditions. I happened to be president of the National Association of Insurance Commissioners that year in 2013. And the then President Obama wanted to extend, as we went into the implementation of the Affordable Care Act and the controversy surrounding companies all over America notifying policyholders that had high deductible plans, I call them, that they would not be able to renew their policy come January 1 because it didn't meet the minimum insurance requirements of the Affordable Care Act. It was no longer a qualified health plan. And so that became very controversial. He contacted our CEO of the NAIC, his good friend and former colleague, Senator Ben Nelson, who he said asked President Donelon to bring a group of his colleagues to the White House so we can talk about that extension and how he wanted to let us, the regulators of insurance, waive that requirement for 1 year, a temporary waiver of that requirement. We sat down, we listened to what I brought my colleagues from North Carolina and from Connecticut with me, one to talk about the ACA and the other to talk about international insurance issues that we were battling with the Treasury Department on the global level over relative to the future regulation of companies doing business worldwide. And so we talked, and he asked for us to make these 1 year extensions available. Interestingly, us in the red states said yes. His friends in the blue states, being protective of the Affordable Care Act, generally said no and didn't do the extension. I brought from GNO Inc., in fact, a letter that they had put together representing groups up and down the Atlantic coast and around the Gulf Coast. Mayors, legislators, congresspeople, chambers of commerce, police juries, et cetera, asking the president to support a rollback of the draconian rate increases in the Biggert Waters, it was called, extension of the National Flood Insurance Program. He had been quoted as saying he was not inclined to do that before that meeting. He took the letter from me and ultimately signed the bill, and ultimately Congress, as you know, passed a rollback that put a cap at 18% per year on the rate increases for flood insurance each of the past 6 years now. Not an inexpensive rate increase. It compounds each year, but frankly, it was much, much less burdensome than the proposed rate increases that would have come with that 5-year glide path to actuarial rates. So we're on the eve of now. It's been extended since it expired a year and a half ago, 3 times, I believe. Our delegation is fighting hard with, and actually the reason we were successful 6 years ago, is because of Superstorm Sandy. Superstorm Sandy had hit the Northeast, New York and New Jersey primarily, with devastating floodwaters that brought those delegations to our side in the reauthorization battle that had typically been led by the coastal states of the Gulf Coast, Florida through Texas. But now we had significant help in the form of the Northeast joining with the Southeast states that have such coastal exposure. So that put us over the hill in getting the support we needed to roll it back. It's there again now, and GNO Inc. is marshaling that, leading that effort to keep the National Flood Insurance Program even under risk rating 2.0 at an affordable cost because of the incredible value and significance it plays in our economy here in Louisiana. For example, this hurricane last week, 2 weeks ago, brought with it not only 150-mile-an-hour winds, but also storm surge of 16 feet. The highest winds recorded on land at Port Fourchon were in the 150-mile-an-hour category. Category 5 is 157 miles per hour, and we were just under that, as we were a year ago in Lake Charles in the Laura event. Not only did this hurricane strike us 16 years to the date after Hurricane Katrina devastated the southeast part of our state, it was a year and 2 days after Laura devastated the southwest corner of Louisiana. As you have heard, I issued an emergency, I actually issued an emergency declaration, emergency rule in the aftermath of Hurricane Laura a year ago for the impacted areas declared a disaster area by the governor. Those rules have been now codified in the aftermath of last year's hurricane season because although I did it after previous catastrophe events, such as the onset of the pandemic in 2019, along with many other states, and in the aftermath of the Hurricane Gustav and Hurricane Isaac, as well as in the aftermath of Katrina and Rita. Twice in those instances, once with Isaac and the other time last year with Laura, my authority to issue those emergency rules was challenged by insurers. Actually, by insurers last year, by the Louisiana Hospital Association in the aftermath of Isaac. One of the arguments put forth by them was that I had no authority to issue such emergency rules. The basis on which it was done with each of those governors, Governor Blanco, Governor Jindal, Governor John Bell Edwards, was a delegation of their emergency powers for insurance purposes to me. And that was challenged in both cases, Isaac as well as Laura, by last year United Healthcare, and in Isaac's case it was by the Louisiana Hospital Association, both of whom were not happy with what I was ordering and requiring them to do. In the case of the health insurance, it had to do with non-cancellation of policies during the 60 days, extended to 90 and maybe to 120. It was extended last year, I believe, to 120 days in the aftermath of Laura and Delta, and we did not do one in the Zeta aftermath. But they didn't appreciate that. We also, in those emergency rules, as I have done for the victims of Hurricane Ida now, in addition to non-cancellation and no premium rate increases during the time of these emergencies, we also told the health insurers that they had to suspend the limitations on prescription renewals because of the fear that policyholders had of going out in public, even to their doctor, to their drugstore, to get their prescriptions renewed. And they took exception to that. They also took exception to our mandate in that emergency rule to expand the telemedicine provisions of their policies. That was done very widely across America and ended up becoming very popular, in particular in rural parts of our state that are underserved with health care providers. It was very effective and productive. The other thing that they took exception to was my suspension of the legislation they had passed some years before requiring step therapy practices as part of their health insurance policies. That step therapy practice is a requirement contained in our health insurance policies in our state, that you start at the lowest, least expensive treatment level before you go up the 5 steps to the highest, most expensive treatment level. That and the telemedicine led to the challenge. Both challenges we were successful in. Both asserted as part of their challenge that I had no authority because the governor can't delegate his authority to anyone. And my lawyers said, frankly, Commissioner, we are vulnerable to that challenge. Fortuitously, in neither case, neither court bit on that part of the challenge, and we avoided the issue. So in the last session, I went to Senator Mark Abraham of Lake Charles and got him to author Senate Bill 29, statutorily giving me the authority for these limited purposes of emergency rules when the governor declares a disaster, for the parishes he declares a disaster, and for the duration of his, not to exceed the duration of his emergency declaration. In addition to that, we are subject to oversight by both the House and Senate insurance committees when we issue emergency rules. So that's in place now. We did Emergency Rule 47 for the victims of well, we did, I forget the number for last year for Laura, and then this year for Ida, with those same provisions that that I just went through. Then the issue presented of the failure, the positive decision by public officials across the impacted area not to declare mandatory evacuations. And they did that for the reason that it was more dangerous to order a mandatory evacuation than it was not to. My daughter told me last evening, 3 of my granddaughters had school until 3 o'clock in their school in New Orleans on the Friday before Ida made landfall in New Orleans. So giving you further evidence of the fact that it was much too late to implement. Everybody was caught with the short fuse for implementation of contraflow that had proven very effective in evacuating New Orleans for Katrina, but only after failing the year before in the attempt to evacuate the metro New Orleans area as Hurricane Ivan headed our way. Ivan, at the last minute, made a right turn and crushed the panhandle of Florida and Gulf Shores, Alabama. But just before making that last-minute turn, it was headed straight for the New Orleans area. And contraflow was implemented for the first time that year, and it gridlocked. It gridlocked from Baton Rouge to Lafayette. And many people were stuck on the Atchafalaya Bridge for 8 hours with no air conditioning in August, with no water, with no fuel to run their air conditioning in their vehicles. And it was a horrible experience for those folks, in particular the elderly who were caught up in it, resulting the next year. And when I said this on WWL radio the other day, Noel Norman, the former sheriff of Jefferson, said, "No question about it, Jim. As you know, 1,800 people lost their lives in the New Orleans metropolitan area in the event of 2005 Hurricane Katrina. A number of those lost their lives because of what they had experienced the year before as they tried to evacuate for the approaching Hurricane Ivan. And that experience being so horrific for them, they decided they would not do it again. And they stayed in place. And frankly, they would have been fine if the levees had held, because the sun came out on Monday morning and everyone thought that was bad, but we made it through. And then the levees broke and there was 6 and 8 feet of water under homes of 80 and 90-year-old people. Actually, the then coroner, Frank Mignard, set up a temporary morgue at the Lamar Dixon facility in Gonzales. And he did a study, a report that he published a year later on the approximate about 1,000 of the 1,800 bodies that were taken to him. And he said in analyzing, not doing autopsies, but in analyzing the cause of death and the location of the where the bodies came from, he concluded there was only one common thread in all of those that he studied, and that was age. He said it didn't matter what race, it didn't matter what income, it didn't matter what parish, didn't matter if it was uptown or lower Ninth Ward. The common thread in those victims was age. And those were the folks, many of whom, who had tried to evacuate the year before and got stuck in the gridlock and the heat and the misery that presented. That was part of the decision-making process for those public officials trying to decide whether to order an evacuation or not. So I have issued a directive 218. I did it the day after the president came to Laplace and asked the insurance industry to waive that mandatory evacuation provision in their policies. And the day before that, I had gotten a request from Allstate Insurance Company asking me to urge companies to waive that provision voluntarily. So on the day after the president did urge them, I also issued a bulletin urging them to do so. And I full well expected that they would, until Labor Day morning at 10 o'clock at my daughter's house in Metairie, when I got on a call with State Farm, and to my absolute shock, I was told by them that they were not going to accommodate that request. So we are where we are today as a result of that, and I had a meeting with some of my staff before coming here today, and we have received about 170 complaints so far, and half of them are for failure to abide by the emergency rule that the directive that I ordered. With those things said, I guess that's about the time for me, and I will open it to questions from the audience. Yes, ma'am. I'll do it. Sure. Thanks, Bill.
With Tropical Storm Nicholas coming, I know there's still a lot of people who are trying to repair after Ida, who have holes in their roofs and such. So what, from an insurance standpoint, would you urge people to do ahead of this storm?
As with all claims for hurricane or any other damage, under your policy, you have a duty to minimize your damage to the extent it's reasonable and safe to do so. And that is covered by whatever expenses incurred, by whatever labor and materials are necessary in order to accomplish that protection. This is not unlike what happened when Delta visited Cameron Parish and then Lake Charles in the aftermath of Laura a year ago. And frankly, we passed a bill, we advocated for and passed a bill in the aftermath of Gustav crushing, coming through Houma and then Baton Rouge, the first major hurricane to hit Baton Rouge since Andrew in '92. Gustav was in '08, and a couple of weeks after Gustav, along came Ike, heading in the same exact path to the Houma area on our coast, and at the last second made a left turn and skirted our coast to make landfall in a horrific fashion in Galveston, Texas. Made for damage in Shreveport as it made its way up to the north, toward the northeast, and set the record for an insured loss event in the state of Ohio, their all-time most expensive. So it's not unusual. What we did thereafter is copy a bill that had been passed in Florida after their events in 2004, limiting hurricane deductibles to one per hurricane season. So I would urge everyone who gets further damage, wind damage, not rising floodwaters. If it brings, as it's projected, a lot of rain with it, 6-8 inches of rain, and that causes your property to be damaged by floodwaters, that is not covered by virtually all homeowners and commercial property policies. So, but for wind damage, for sure, that is a new claim, and they should file a claim for that damage as well, all the while taking whatever steps are necessary to minimize further damage to their already impacted property.
And to follow up on that, especially in our southern parishes, people still don't have power, water, and so while they may be applying for the blue roof, the tarps and everything, many people still haven't gotten them, and this storm is looking to bring a lot of rain. So if they get rain through those damaged roofs and such, is that going to penalize their claim?
Nope. In fact, that will be covered. Wind-driven rain is covered. Rising waters are not. Flood waters are not. But wind-driven rain is covered. So if the opening in your roof results in water coming in now and getting behind your sheetrock and your walls, the remediation and repair of that will be part of your claim for. And I would also urge people who don't think they have a legitimate claim because of their $5,000 named storm or hurricane deductible, file the claim even if your claim will be under that amount, because your second event, if you are damaged a second time, is limited by whatever your total deductible is minus what they didn't pay you for the first hurricane because of that deductible. Yes, sir.
You said about half of those 170 complaints you've received are about not complying with your directive. Are those primarily State Farm, or are there
No.
other insurers that have been, causing issues?
We have about 10, they guesstimated to me, from State Farm, but it's spread over about a dozen companies, including Allstate. So, and that's not a real measure, because many times adjusters, I've licensed or registered 5,000 out-of-state adjusters since Ida hit that have been sent to Louisiana to handle what I'm estimating will end up being 500,000 claims. For Katrina and Rita, we had 1 million. For Laura, Delta, and Zeta, we had 315,000 last year. I'm estimating this one will end up being 500,000. I'm basing that on the industry projections on what their insured losses will end up being from this event, and that's in the $15 to $25 billion range. And if I said million, I meant a little while ago, I meant billion. So, yes, sir.
Is there any estimate from the companies about how much it will cost them to cover this evacuation coverage? Or
Good question. And I asked my chief actuary before I issued the directive, the order. And no, there is no estimate yet as to what that coverage would amount to. But my chief actuary did tell me when I was preparing to issue my directive, and I asked her to give me an estimate. She said that she thought, without data to document it, but just perusing the rate filings of some of the major carriers, that the premium cost today, pre-Ida, for that coverage is 1% of the overall homeowner's insurance cost. So,
any other reasons why they are choosing not to cover it?
the only reason I was given is that they are going to implement the language in their policies. Yes, ma'am.
My question is kind of a two-parter. So if they are refusing to pay the insurer under your directive,
If they're doing what?
refusing to pay the insurer under your directive, what can you do about it? And also, will you be able to then force them to reduce their payments as far as
Their premiums, you mean?
their premiums?
Okay. Two parts. I have a plethora of authority over companies licensed to do business in my state, in our state. That includes the fining authority. It includes the suspending authority. It includes the revocation of their authority to do business in our state. I had issues with Allstate in the aftermath of Katrina and Rita 16 years ago. significant issues relative to a unique to our state 3-year protection law that has been on the books since 1992. And what it says is an insurer who's been providing coverage to a policyholder for 3 or more years is married to that policyholder, that customer, for as long as that customer is doing, as long as that company is doing homeowners business in our state. They don't like that. They like to be able to do what they can do in the other 49 states, and that is come and go as they please, non-renew when they want. They can't for homeowners in the state of Louisiana. Allstate tried 3 different ways to get around that, and I ultimately, after their 3rd unsuccessful effort, I issued a fine of the maximum that I'm authorized by law to do of $250,000, and that ended that dispute. And frankly, I asked for a meeting with their still CEO, Tom Wilson, in his offices in North Park in Illinois. I brought my senior staff with me. He brought his senior staff in. Then Governor Blanco joined us by conference call. And I said, why are you doing this? Where are you trying to get your 22% market share down to? And they said about half, about 11%, which is where they are today. And I said, well, do it by attrition. Just do it over the years as you lose. What do you lose per year? We lose about 8% of our policy by. I said, then do it by attrition, which is what they ended up doing. It didn't go fast enough, so they and State Farm implemented a 5% name storm deductible, up from the 2 or 3% that is typical and what they had before. And that accelerated their drop down to where they wanted to get, despite the 3-year rule. So, all of that to say, my fine authority was $250,000. I think it had an effect and stopped them from pursuing those various avenues that I won't take the time to go over with you. But we will, and in the aftermath of Laura, we had complaints about failure to communicate, failure to pay what was promised, failure to respond to consumer needs. Senator Ronnie Johns of Lake Charles, at my request, got $600,000 added to our budget in the last week of the session to fund contracts with what's called market conduct examination companies. It's R&R, I forget what the initials stand for, but it's a national firm that does business in all 50 states. They go to the offices of the companies we're examining and go through their files, through their records, and document how they have done what they were charged to do on behalf of their policyholders. We picked 5 companies for this company to go do a market conduct examination of. We based our selection on a complaint index that we devised. It's on our website. Anybody can go see it. It shows the top 25 companies or more. I'm not sure. I think it is the top 25. The top 25 companies by market share and what their percent of the market is. State Farm's 25%, all states 11%, et cetera, et cetera. And then our 1,700 formal complaints and what their market share, what their percent, which each of those 25 companies share of those 1,700 formal complaints for Delta and Laura were. And that index, if you will, their complaint ranking percent versus their market percent, created what we call the index. We didn't take the top 5. I can't tell you which companies we're examining. That's confidential by law in all 50 states. And it's not the top 5 of the ones in our index that's public information. By the way, we get that $600,000 back from those companies when we finish our market conduct exams, whatever the outcome, because that under law, they are responsible for. So when we get that $600,000 back, we will put it back in the general fund of the state of Louisiana. Yes, ma'am.
As a follow-up, I assume that the companies are already they built in this anticipation of fines. Does that do anything for the consumer?
Say that again?
I'm assuming that
Oh.
they have built in this
No, I am not the courts. I do not have the authority to order them to pay. They, like everybody, have the right to go to have their day in court. If they disagree with me, that doesn't mean they have to pay what I think they should have paid to Jane Doe or John Smith. They still have the right in. They're using the courts extensively, in notwithstanding our 1,700 formal complaints.
We have time for one more question.
Blake?
We're hearing from folks who, maybe still don't have electricity or didn't have electricity. Their homes are incredibly hot, but they're still being told that they're habitable, livable. I mean, do you think there should be some distinction there for what is livable in South Louisiana with no electricity?
Well, I will just tell you that debate was hotly debated through the last session in the aftermath of Laura. And that bill got to the last, I think either the second to last or the third or the last step in the four-step process. The problem with saying that we can cover as uninhabitable properties that are out of power is whatever the cost of that would be for everybody with an insurance policy who has a power outage. And needless to say, it's expensive. It's very, very expensive to declare that there's two different kinds of additional living expense. I refer to them as short-term, and that's the evacuation-triggered additional living expense to go get out of harm's way to protect yourself from the danger of the approaching hurricane. And in almost all policies, that's limited to 14 days. The other additional living expense I refer to as the long-term additional living expense. And that is typically 1 year, with State Farm being 2 years. But that is triggered only when your premises are uninhabitable. The short term that we've been talking about for the past 2 weeks, uninhabitable has nothing to do with it. It's just whether or not you had the right to evacuate because of the issuance of a evacuation order or my order saying that wasn't necessary. You had good reason to evacuate, whether your parish official told you you had to or not. So, but for the long term, that is triggered by the premises under repair being uninhabitable while being repaired. And the issue in Lake Charles that went to the legislature was we should declare anybody without power as having an uninhabitable premise and property. That's a very expensive proposition, but it's a decision for the legislature to make. Am I done? Thanks.
Thank you very much.
Appreciate it.
Thank you. We will see you next week where we'll have a representative from STAR, Sexual Trauma Awareness and Response. So be back next Monday. Thank you.